like
inflation is the discounting mechanism, not rates.
Exactly. That's exactly, yeah.
And so the other thing that's interesting about this cycle is the best indicator for almost everything in the world is the ISM survey, the business cycle. The ISM is still not above 50.
Yeah.
And, back in 2017, it had come 50, but by about March, it really started accelerating. So we haven't even had a business cycle yet. Now, what's interesting is the best indicator of when you should be looking for a top in crypto is when the ISM is peaking, because that's when liquidity starts changing. Now, that happened really early in 2021 because of the pandemic. So it happened in March 2021. 2017 didn't happen until the end of the year. I think because ISM has been so low this year, there's a chance that this thing doesn't peak until Q1 2026. So it's a slightly different cycle, but we're just not even in the ballpark of looking for a larger top.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal will talk about whether the banana zone is over and explore the key narratives shaping the crypto market today. Let's catch him up to know more.
The China game here is pretty clear. They cannot stimulate because the dollar is too strong and they'll break the lower bound of the yuan. Right? They just can't do it. It's exactly what happened back in 2017. What they need is the US to weaken the dollar, then they can stimulate. They know it. Everybody knows it. Yellen knows it. Scott Bessent will know it. That is the game. And the game is, we will not give this to you until you agree tariffs. And then they'll give it to them. And that's exactly what Trump did last time. So really, they will stimulate massively. They have to. They've got full-blown debt deflation going on. But they can't do it without losing their currency. They tend not to like to give the Chinese direct swap lines. So the general mechanism is you give it to Japan. So you get the Japanese to weaken the dollar. And they showed their hand a while ago when they weakened the yen. The strengthening the yen. Once they strengthen the yen, that injects liquidity into the system. The largest part of the euro-dollar market is the Japanese banks. So you need to give Japanese banks liquidity and they'll recycle it into China because they don't often like to give the Chinese direct swap lines. So whatever the mechanism is, the European banks and the South Koreans are also involved in the euro-dollar market, but it's really the Japanese. So usually you get the signal from Japan first that they start to say, we've had enough of the currency being this strong or this weak, and then it starts happening. No, I think the business cycle's still not above 50. It will go above 50. That means corporate earnings go up, and then we get rid of that bifurcation between the tech stocks, which are cash flow driven, zero debt, and the regular economy. That gap closes because earnings grow. Earnings grow, household earnings grow. Household earnings grow, investment goes into markets. So that virtuous cycle is all the same cycle across all assets. The next phase of this, we will see the cyclical plays, the commodity plays, all starting to rally as the global economy starts to recover. So that's all to come. The ISM is still below 50.
Bitcoin has been riding a wave of volatility, shadowing the unpredictable movements of U.S. stocks. Recently, the cryptocurrency hovered just below $95,000, with analysts labeling the market response a bearish overreaction. This reaction followed U.S. employment data that initially pushed Bitcoin toward $92,000 before a sharp rebound saw it gain $2,000 in an hour. However, the recovery was short-lived, as Bitcoin returned to familiar short-term trading levels. Meanwhile, the S&P 500 and Nasdaq Composite Index closed down roughly 1.5% on the same day, signaling broader market uncertainty. Some experts believe this turbulence might ultimately benefit bulls. Charles Edwards of Capriol Investments highlighted the overreaction to strong jobs data, suggesting it could support a prolonged bull run. Drawing parallels to the March 2020 COVID-19 crash, Edwards pointed out that market sentiment shifts could lead to another bounce soon, especially as employment numbers defy fears of rising unemployment. Other market voices emphasize the importance of Bitcoin maintaining key support levels. A drop below $90,000 could trigger further declines, making a sharp recovery crucial. With Relative Strength Index, RSI, readings near critical support, analysts see potential for an upward trend within weeks. For now, Bitcoin and the broader crypto market face a pivotal moment, testing resilience against economic headwinds and investor sentiment shifts. The Altcoin Season Index, a key indicator from CoinMarketCap, climbed to 46 on January 11, 2025, marking a slight uptick from the previous day. Despite this increase, the market remains firmly entrenched in Bitcoin season, characterized by fewer than 25% of altcoins outperforming Bitcoin over the past 90 days. This dynamic continues to highlight Bitcoin's dominance, even as some altcoins begin to show signs of life.
I don't see anything that changes that because stimulus has to be on the cards for, Europe's pretty bad.
Yeah.
The UK's not in great shape. And we could see yield curve control in some of these countries, particularly the UK, for example.
UK is freaking out right now.
Yeah, it's got a real problem. There's not enough liquidity in the system, which is why the bond markets are decoupling from forward-looking inflation expectations, because there's all the supply of the 4-year cycle of refinancing the debt, not enough liquidity to manage it. The other big change that happens, I think Basel IV comes into play, not in the UK yet, but in Europe first. And Basel IV, as ever, is just another backhanded mechanism for the banks to be forced to own more bonds. The UK and the US come at the middle of the year. So there's a big demand from bonds that come from this structural change as well, which helps add liquidity into the system. The two things he doesn't want is high rates, because he's a property guy, right? He understands he's a growth guy. So he doesn't want high rates and he doesn't want a higher dollar. So he comes in about a week's time. So the chances of this changing pretty fast. And again, I've gone through, I know Scott Besson. He was a Global Macro Investor subscriber. I've known him for a long time. He gets what has to happen here. There was a great interview with the new guys going in the Economic Council. He just talked about, we're going to need a Plaza Accord at some point if this continues. We have to lower the dollar. And Trump needs exports because you've got the trade deficit. So everybody has to get the dollar lower. And all he did last time in 2017 was right at the beginning. As soon as he came in, he said the dollar needs to weaken. He already said this week rates are too high.
The Altcoin Season Index measures the performance of the top 100 cryptocurrencies, excluding stablecoins and wrapped tokens, relative to Bitcoin. The index ranges from 1 to 100, with scores from 1 to 24 indicating strong Bitcoin dominance and 50 or above signaling a transition to altcoin season. Currently, a score of 46 suggests Bitcoin remains the preferred asset, yet altcoin activity is gradually increasing. Recent movements in the index reflect shifting market sentiment. The 1-point rise indicates a subtle but notable trend. Altcoins may soon gain more traction. However, Bitcoin season persists, driven by macroeconomic factors and institutional confidence in Bitcoin's stability. For investors, this phase presents both challenges and opportunities. Some see this period as an ideal time to accumulate promising altcoins before a potential breakout, while others maintain a conservative stance, favoring Bitcoin's relative safety. The path to altcoin season requires further momentum, typically marked by at least 75% of altcoins outperforming Bitcoin. Investors should watch for key indicators, including consistent index growth above 50, increased altcoin trading volumes, and heightened social media discussions surrounding altcoins. Although the current market favors Bitcoin, a gradual shift could open doors for savvy investors seeking gains in high-quality altcoins with robust fundamentals and real-world applications. The slight rise in the Altcoin Season Index reflects a dynamic crypto market, balancing Bitcoin's dominance with emerging altcoin potential. As market conditions evolve, understanding these trends will be crucial for maximizing investment strategies and capitalizing on the next market phase. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.